Is the recording underway? Okay, that's great, thank you. Good afternoon, ladies and gentlemen. Welcome to this meeting of the Audit and Scrutiny Committee. Before we begin today's formal business, I'd like to go through some items of housekeeping as usual. Just to remind you that today is a hybrid meeting and we have members joining us online. So I would ask for the usual protocol with regards to that, including muting your microphone when you're not speaking, using the raise your hand function to ask a question or make a comment, and avoid using the chat function for debate amongst one another. For those attending in person, please remember to activate your microphone when speaking and then turn it off again when you're finished speaking. Myself and the officers attending will monitor proceedings with a view to ensuring all requests to speak are seen. To introduce the officers attending today's committee, we are joined by Stephen Quinn, the Chief Executive, Margaret McCrossan, Head of Accountancy, Barbara Clark, Chief Accountant, Michelle Blair, Chief Auditor, Anthony Jenkins, Resilience Officer, Linda Hutchison, Clerk to the Committee, Leslie Ann Burns, Assistant Committee Services Officer, and Grace Scanlon from External Auditors, Ernst & Young. That takes us on to today's formal agenda. Item 1 is apologies for absence. I have Councillor Paul Edlin and Councillor Annette Ireland. Any further?
No, that's the only apologies, Chair.
Okay, that's super, thank you. Item 2 is declarations of interest. So the Council's Code of Conduct requires elected members to declare any financial or non-financial interests on today's agenda. Are there any declarations to be made? Okay, shakes of the head all round. No. Item 3 is my Chairman's report. So one item to update you on, which is further to the previous meeting of this committee, where we considered the staff sickness absence figures published for the 22-23 year. A delegation from this committee, comprising Councillors Wallace, Ireland and myself, met with representatives from Human Resources to discuss this matter in greater detail, including the measures which management are taking to try and redress the situation. In addition to the measures set out in the paper which we previously considered, such as the appointment of a Health and Wellbeing Officer, a revised and easier to follow staff sickness management policy, and additional training for managers, we discussed other matters of relevance. I can confirm that the published report for the 23-24 figures will be brought forward and presented to the committee earlier than usual so that we can consider the matter again and appraise the effectiveness of these extra measures. So I would simply ask the committee to note the report. Okay, agreed. Thank you. Item 4 is the Interim Treasury Management Report for Quarter 4 of 23-24. And I'd like to invite Barbara Clark to present this report. Thank you.
Thank you, Chair. As part of the Council's Treasury Management Strategy, the Chief Financial Officer is required to report on the quarterly activities of its Treasury Management operations, and this report is to achieve that requirement. This is a very high-level report showing the Council's debt position, along with graphs depicting the movement in investments and borrowing over the first 11 months of the financial year. From the report, you can see that the long-term borrowing reduced slightly due to a small repayment, and no long-term borrowing has been taken due to the high levels of interest rates currently offered. As part of the Council's strategy, the percentage of variable rate loans should be no more than 15% of the total debt outstanding, and in the first 11 months of the year, this peaked at just over 7%. This will creep up as PWLB loans are paid off, or reduce as further loans are taken. With regard to the short-term investments, these have decreased due to the cash flow in both capital and revenue, along with a reduction in planned borrowing. Both expenditure and income can fluctuate daily, depending on whether there's just been a large creditor run or a pay run, so the short-term balances reflect these cash flow movements. The prudential indicators in the report help to confirm the capital investment plans and Treasury management decisions are affordable, prudent and sustainable. In particular, the operational boundary and the authorised limit for external debt demonstrates that the Council is operating well within its limits, with the movement in these indicators resulting from a change to the profiling of capital spend since the indicators were first approved in March 23. Lastly, the report requests that the Committee recommend to Council that the attached list of counterparties be approved. This has not changed from the counterparty list last approved as part of the Quarter 3 report. All investments are restricted to UK bodies with high credit ratings, with the maximum period of investment restricted to 6 months. I'm happy to take any questions, Chair.
That's great. Thank you, Barbara. I appreciate we seem to be looking at these reports quite more often just now, and these figures are pretty much as up to date as we're going to get, and they're fairly consistent. But are there any questions or comments from members? Okay, that's a no, so can I ask that we note the report and accept the recommended counterparties? Okay, that's agreed. Thank you. And thanks, Barbara. Okay, item 5 is a review of the Council Strategic Risk Register and Risk Management Progress. I'd like to invite Anthony Jenkins, our Resilience Manager, to speak to that item.
Hi, good afternoon. Thank you. So just to present an update to the Council Strategic Risk Register, which was last considered in September. As the report will note, there's been a significant review of that Strategic Risk Register carried out by the Corporate Management Team. That primarily took place in January of this year, considering the approaches undertaken across other local authorities, along with a number of other factors, which included where we have long-term or unchanged risks or lower scoring risks. Following that review, the 36 risks that were on there at the previous report in September have been reduced down to 14. As reassurance, those risks that have been removed from the Strategic Risk Register were agreed at CMT Corporate Management Team to be relocated to an appropriate alternative, so that would be either a departmental, a service or a project risk register, or maybe even an asset management plan. That initial review was supported by the following kind of main assumptions. Our medium risks, those kind of amber ones with a score below 8, were considered better reflected in an alternative risk register. Those with a score of 8 or higher would initially remain on that strategic risk register until such times as the proposed mitigations lower the risk scores to that kind of palatable level where they would be on an alternative risk register. Risks that have been unchanged or considered unlikely to change within 12 months should be more regularly considered in depth, with a clear justification for their remaining on the strategic risk register. And then finally, where a risk is included on another public-facing risk register. So a kind of main example of that would be something like the integration joint board papers. It should only be held on one source so that there is a reduction of duplication and a good strength in version control. There will be periodic reviews of the strategic risk register through the CMT, and that will consider whether we've got any changes or escalation. Going forward, that will also consider the kind of language of the risks so that it's clear, understandable, given that this is a public-facing document. So I think probably fair to say that some of the risks are quite weighty in their language, and as part of that CMT review, that will be kind of considered. But an example of that in March would be the addition of the 15th risk that's on that document now, which is that the kind of UK general election being potentially short notice at 25 days or 25 working days notice, and the impact that could have on normal council services. So just to reiterate, that the intention is the strategic risk register would act as a vehicle highlighting the greatest risks that the council faces and are actively seeking to mitigate. There will be regular reviews to consider the description and controls of risks, assuring they're accurate and succinct, and that the controls are realistic and treat the risks we have. And I suppose last but not least, that there is an ongoing review of the training for staff to support their putting in quality descriptions, controls, etc. That will come back via the corporate management team, and go under the auspices of our risk management framework and risk management strategy. Thank you.
That's great. Thank you, Anthony. I'd like to invite Stephen as the Chief Executive, if there's anything you want to add at this stage. It's a pretty comprehensive update from Anthony, I know, but...
No, nothing to add, Chair, at this stage. Thanks to Anthony for introducing the report.
Yeah, that's super, thank you. Are there any questions from members? Okay, Councillor Wallace.
I just wondering, is it possible to have an overview of the specific changes, whether we've upgraded or downgraded? I see there's an appendix, but a verbal description of these might be quite useful. Yeah.
I can certainly provide a more kind of full written report, to be honest.
Well, we've got a written report here.
Yeah.
Just to get a verbal kind of flavour of
Sure. So the vast majority were kind of moved due to the scoring being kind of lower than 8, as kind of outlined. There were a number, primarily in kind of sections outcomes 2 and 5 that were removed because they're on the Joint Integration Board risk register. Oh, sorry, I see Stephen wants to come in. And then kind of thereafter, some of the longer term risks were kind of placed on departmental or project risk registers, but it was primarily due to the scoring that they were kind of placed on departmental, project or service risk registers.
Thanks, Councillor. If it gives you some confidence, the corporate management team, along with some other officers, spent quite considerable time going through all of the risks as they were presented historically. And I think what has happened historically, risks have gone on but never really come back off. And what was really important to us is when we look across the country and you look at council risk registers, it does sit at that sort of 12 to 15 mark. And I felt, and other officers felt, that because of the number that was on it, were we giving the ones that really required the right level of scrutiny on an ongoing basis? So that's where there was quite robust conversation and evidence presented to determine what needs to stay on the corporate risk register, and if it's coming off the corporate risk register, where is it going? Because it can't just disappear. And where is the best place for that to be? Also, hopefully, to give you some assurance, as part of our measures going forward, we will, of course, periodically be looking at the corporate risk register at corporate management team, but as part of that, departments and directorates will be asked to bring forward on a periodic basis their top risks in their own departmental directorate risk registers, so that those can also be discussed at a corporate level to determine if there's any other mitigating factors need to be put in place, or indeed do any of them merit coming back onto a corporate risk register, and similarly to any of the corporate risks, can they merit, once mitigations are put in place and things move on, going off to departmental and directorate risk registers. So it's really just to try and get a balance to ensure that the right people are scrutinising the risks across the council, rather than having one big list which has only been scrutinised by a small amount of people.
Yeah, I mean, I would further add to that on page 26, there's a list of the risks which have been moved out of the strategic risk register and moved to an alternate risk register somewhere. And page 47 shows the change log. So other risks that have been removed because they no longer apply, such as COVID or Britain's exit of the European Union. Are there any follow-ups to that, Councillor Willis, before?
It's just to say, in future, if it's at all possible, I mean, it's a very significant document that we have here. There's an awful lot of words in it, and I just feel that the whole idea of a meeting like this is for us to add some flavour and some colour to the information that's here. It's just be very useful if we, as you're suggesting there, as the CEO is suggesting here, is that given a very good overview of what of how the risk register has been viewed. It's just, as I say, it'd be very useful if at future meetings, if we could just add a bit of colour and description as to how it's been viewed and any changes that are made and why they've been made. Okay, that seem fair?
Absolutely,
yeah, okay,
Councillor. And I think if I'm picking that up right, maybe even just to enhance it coming forward, if something's coming off, there is probably just a slight descriptor of why we believe it's coming off corporate risk, or indeed why it's coming on. That be fair? Yeah. Okay. I'm sure that happens.
I was just going to say that, in previous occasions we have tended to have a bit more flavour and reasons as to why things are coming off, and an overview. Okay. Thanks.
I think I would probably add to that as well that the removed risk log, which begins from page 47 onwards, it's obviously quite a lengthy document, and the way it appears in the council's papers, it's like a size 4 font, it's maybe something that actually be quite helpful to send round the committee. It looks like it comes from a spreadsheet, so perhaps it could be sent round in that format, maybe a little easier for members to read. Councillor Buchanan.
Thanks, Chair. It was Stephen's answered some of the points that I had in terms of that it's very much a living document and that it can be altered. And my question was really just around the process of ensuring that the risks that have been, if you like, moved down to departmental risks, that should they start to cause concern, or should there start to be issues that would arise that would require that to become more corporate, that they can be moved easily enough. And that ties in with the suggestion that there will be regular updates to that and monitoring of it to ensure that the risk register, that the corporate risk register, if you like, can be amended as is seen fit, whether it be by officers, whether it be Audit and Scrutiny Committee or full council, that we're aware that that is very much a living document and that it's not a way to try and diminish potential risks. It's about managing it in the right place and making sure that should a risk become a bigger issue than perhaps it currently is, that it will be moved onwards and taken and dealt with as we would expect in terms of a corporate matter. So hopefully, you know, some of the concerns that I had have been raised. Yes, I can understand that having fewer on the corporate list that are maybe the major concerns at the moment. But should that alter, and I'm glad to hear that there'll be a regular review of it to ensure that that happens.
Okay, anything further to add to Tony's remarks there? Stephen?
Again, just maybe as a further ability to give you some confidence, Councillor Buchanan, is the other thing you will see from the paper, which I think is really important, is that we get officers with the right level of training to understand the risk register and understand it in a professional and way with an experience of a living and working document. So that will take place as well, both for Anthony and for others. And it is that part, you're absolutely right, about ensuring that we have a line of sight through from the corporate risk register through to directorate and project risks, and that they can go back and forward. And that's why I've also asked to reiterate, as I said to Councillor Wallace, that within that process there will be the opportunity, in fact not the opportunity, what will happen is that directorate risks will also be presented as a matter of course periodically to corporate management team, so that they are not out the way, they are actually being highlighted. So I hope what we're doing here will actually strengthen our approach to risk and certainly not diminish it. Thank you.
Okay, that's great, thank you. If I could perhaps put one of those to the test. On page 29 we have risk 2.2, the risk being the increase in number of children and adults with additional support requirements, leading to a rise in demand which impacts the ability to provide services. It won't have escaped anyone that obviously the HSCP and HSCPs across the country are finding things very tight, very difficult. Now the mitigation we have in the register here against that risk is the Supporting People Framework Action Plan, which brings the risk score from 9 down to 6. In terms of risk 5.1, it brings it from 12 down to 9 in terms of older people. But that's predicated on the action plan actually being effective for the purpose for which it was designed. And obviously there have been some changes within the IJB recently, so I'd be confident that actually this is a fair representation of the risk mitigation process that's in place. Stevens, you're perhaps best to pick that up.
Sure. Obviously, the Health and Social Care Partnership lead, Julie, isn't with us today, and she should probably give you the most robust response to that. But we did look at that when we were going through all of the risks, and that was the mitigating factors that they put in place, and that is the Supporting People framework. But as you're aware, the really important part of that is the review, the audit and the planning of care packages for whether it's adults with additional support needs or indeed elderly care. And I'm actually, again, hopefully to give you some confidence, Chair, leaving this meeting today to go and have that very conversation with our health and social care colleagues. And one of the things we are talking about is how do we support, resource that very part of reviewing care plans to ensure that, yeah, it's going to be tough. The Supporting People framework will move to a critical and significant level of need, but what is absolutely critical is that the reviews are done timely and that they are not only a review, the planning is done, but the review takes place at an appropriate time, because the needs of people can go up and down, and we need to ensure we are getting the needs of people on an ongoing basis. So we're actually leaving here to have that conversation about how we put that in place. And that's to suggest it's not in place. That's not the case. How do we further improve in terms of resourcing, how we maintain and improve upon what they already do?
Yeah. Which I suppose comes back to the point that, you know, this isn't a once-a-year exercise, it's a living document.
Yes.
So, you know, things like that do have to be updated on a periodic basis. Councillor Wallace?
I was just going to say, excellent to hear that there's going to be training involved in how we actually use the risk register and how managers should be using the risk register. It might be something for the future. It'd be quite good maybe have a presentation as to how the risk register is actually used in practice. If we can maybe get a few examples, maybe just for the future at some point for the audit committee. Yeah,
happy to do that.
I think it's a very good idea. I'm very keen that we maintain training for committee members, and it aids our understanding in how these measures we review are actually used. Well, that will obviously be managed by the clerk, and we can have a discussion offline about how we could perhaps approach implementing that for members.
Yeah, no, that's fine. There'll be a report to the next meeting on the work plan, so we can certainly factor a presentation on that into the timetable for the year ahead. Thank you.
Okay, that's super, thank you. Are there any further questions on this item 5? Okay, on that basis, I'd be happy to accept the report. Yes. Okay. Item 6 is the provisional annual audit plan for the year ended 31st March 2024, and this report will be presented by Grace Scanlon from Ernst & Young External Auditors. Grace, over to you.
Thank you, Chair. So this is the second year of our appointment, so as you'd expect then the plan does remain quite similar to the plan that was considered by the committee last year, but I will briefly describe the key sections of the plan and just highlight areas I think should be brought to your attention. So the first section is our executive summary, where we do set out our responsibilities and the risks that we've identified in relation both to the financial statements audit and our wider scope work, and also the levels of materiality that we would propose for the audit this year. I would just highlight one change in relation to our assessment of materiality that's on page 5 of our report. We've proposed to increase the level of materiality that we apply for the reporting threshold. We call it the reporting threshold, and that's the level at which, if we identify any errors during the audit, that we'll report within our annual audit report to this committee. So previously, Audit Scotland had actually mandated a level of £250,000 across basically the public sector, so that any errors of that level would be reported within our annual report. They've removed that requirement this year, and so we've just applied a level of 5% of our planning materiality. So that's in line with our audit approach for almost all bodies, particularly public bodies. It just means that in practice then, if we find any errors below that level, then we just note them and move on, and so we don't bring them to the attention of management or to this committee. So it is a change. It moves it from £250,000 up to £360,000. So we think it will be a little bit more efficient, but it is just that the committee needs to be comfortable with that level. In section 2 then we set out just contextual sector developments, including Audit Scotland's recent report on local government finances, the implications of the Scottish budget and the Verity House agreement. And then section 3 covers our approach to the financial statements audit, including a bit more detail on that assessment of materiality. But there are 2 specific areas I would draw to the committee's attention as well. The first is on our page 13, where we've commented on the number of charitable trusts that the Council has, and very recent advice from Audit Scotland encouraging just small changes to the governance of the trust to move them out of the Section 106 regime. And that is because of Section 106 charities, that means that they need a full external audit by us, by the Council's auditors. So I think it's fair to say that the head of accountancy over there leapt at the chance to reduce the audit fees. So progress has been made really very quickly to move, we think so far, 5 of the 6 trusts out of the audit scope for this financial year. So that will obviously have all gone? Oh good, all gone. So that obviously will have an impact on audit fees, which will make somebody close to me very happy, I'm sure. In section 3, we also described the significant inherent risks that we've identified, and there was one main change from last year, just to highlight. In 22-23, then, we did identify the valuation of PFI and PPP liabilities as a significant risk. Really, that was reflecting that it was the first year of our audit and the value and, I guess, the age and complexity of those contracts. But based on the procedures that we did perform last year, including the review of the financial models and the confirmation all the way back to the contracts, we were happy to reduce that to an inherent risk. So I guess that just reflects the quality of the work that was underpinning that. We've identified one new inherent risk, and that just relates to the implementation of a new accounting standard, IFRS 16, on leases. So the accountancy team has a big programme of work really to support that, so it's just to recognise that through the year. Section 4 describes the core area of work that we'll undertake for each of the wider scope areas of audit, and I would just highlight on page 24 of the report the risk in relation to financial sustainability, where I'm sure it's not a surprise, but we will focus on financial forecasting and the delivery of savings and the level of reserves. And I think, as you alluded to earlier, particularly where there's factors that aren't within the Council's control. And on page 28, then, we set out the area that the Accounts Commission has asked us to consider and report on this year as part of our best value responsibilities. And so this year we'll be looking at it. It's called Innovation in Workforce Planning. So very much about how workforce planning happens at the Council, but also they're looking for kind of good areas of good practice as well that we'll pick up during that. Finally, we include appendices that start at page 29, which set out our responsibilities. I would flag that we didn't have the information through from Audit Scotland to allow us to set out the expected fees in the same way as we did last year. But we have had a number of meetings with officers, and I think we have the shared goal of minimising any additional audit procedures, particularly in relation to asset valuations that happened last year. And I've mentioned, of course, taking out the Section 106 trusts. Finally, we've set out the recommendations that were raised last year in Appendix F, and just to confirm that we will follow up those actions as part of our work and reporting this year. And Chair, I'll stop there, but happy to take any questions.
Yeah, thank you. Before I open it out to general questions, there's a couple of wee things I was looking for some clarity on, which I think would be helpful to the committee. In terms of page 55, where we're setting materiality, that reporting threshold figure of 360,000, would it be correct in saying that there's also items which we consider to be material in nature? So, for example, any instances of fraud, bribery, or particular errors such as payroll, which are below that threshold, are still considered as material?
Yep, that's right. So we consider anything that would, I don't want to call it a daily record test, but if we think that there would be a legitimate interest, particularly from this committee or the public, then we apply a lower level of materiality. Traditionally, we've used related parties, so where there's arm's length transactions going on, and also we picked up payroll, but the remuneration report in particular, then we apply a very low level of materiality, so around about £1,000, just to make sure that they are all correct, I suppose.
I just thought it was important to kind of get that on the record, that you're not saying anything below 360,000. We're not reporting that we're not interested, because there's a bit more to it than that. And the second question is around the fees. So that sectoral cap, which is shown on the fee schedule, that's essentially the figure still to be confirmed. And it's really just to give a wee bit kind of further narrative for the committee's benefit, that that's essentially, correct if I'm wrong, that's set by Audit Scotland, and that's basically the maximum fee that NSON could charge us.
So they set the fees. Now, I understand that it's gone up by about 6% across the board, but what we haven't got is that cap bit that, where they would take out anything relating specifically to the council. And I think that they are doing certain adjustments for things like travel, and things were lower than last year. So I think there's some adjustments to go through, and I don't know them just now, but certainly we'll confirm that in the final plan and send that out.
That's super, thank you. I'd like to open it out for general questions now. I think Councillor Wallace, you indicated you wish to speak.
Got a few queries, if we can just do one by one. What was that you mentioned about a cap on charges? Is there a cap on what Audit Scotland are allowed to charge us? Is that correct?
The sectoral cap, Grace. Yeah.
So it's an adjustment that Audit Scotland make. So they will set a fee, and I'm not sure how they do that, but they set the fees across the board for all.
Who sets the fee?
Audit Scotland set the fee. Okay. To make sure that they think it's considered fair across the whole board. And then certainly last year, and we think this year, then they apply a cap to take out. So some of the costs, for example, during COVID didn't happen, and so it's a way of them adjusting it down to make sure that any kind of fees that were previously paid and weren't needed are now brought out, taken down. I'm not sure exactly how it works. We certainly just get it in a letter and then we put it in the report, so we don't have that through yet.
Yeah, I should add, as whilst Rob Jones is not here today, he's indicated that any questions from committee members, he can pick them up following the meeting as well. But, yeah, I believe you had further questions, Councillor Wallace.
Yeah, it's just to make sure that a cap has been put in place, therefore, in order to make sure that we're under that cap, that we're removing certain things from the audit scope. That's not the case.
No, that's not the case.
Right, okay. Sorry, it's just the way it came over.
Yes, it's confusing because there's the cap that they apply initially in the fees, and then if we do identify any areas of work, then there's another cap about which we can't go beyond without asking for approval. Hopefully we won't ever get to that this year, but there's two caps essentially that exist to make sure it's fair.
Okay. So like on page 89, for example, looking at the previous year figures, we have the total fee of 328,000. That's minus 11,000 sectoral price cap. So presumably, if the cap hadn't been in place, the total time spent by Ernst & Young would have been higher than what we had actually paid. Is that my understanding? Yes. Yeah. This has come up previously at the Renfrewshire Valuation Joint Board, and I remember asking them a very similar question. So, go on.
Yeah, reference was made to the Verity House agreement. What was that about? I didn't pick you up on that.
It was literally just context, so the sectoral context, so around about the developments that have been going on within local government and our expectations for them, and how that will impact the financial forecasting in particular in the future.
Could I perhaps ask what Audit Scotland's view is on the Verity House agreement and how it's been going and what impact, if any, it's had on local councils?
If you can answer that, please, that'd be great.
So I can't speak for Audit Scotland, obviously, but we do refer in there to the financial bulletin that the Accounts Commission have published in, I want to say January, where they do comment on the Verity House agreement. And I think their comment was around about some of the developments we expected to be in place have slipped. So, for example, some of the we hope to be in a position that multi-year budgeting would be possible, and we're not there yet. So it's slipped, I guess, is the main comment.
And I suppose that's all about ensuring that the council is, perhaps saying the going concern is not the right terminology because we're not a commercial business, but that the future financial sustainability of the council and us meeting the legal obligations would not be compromised. So I think that's the context behind it, right? Councillor Wallace again.
Yep. Moving on to the trust now. That 5 of the 6 trusts have been removed. Does this mean that we're going to have a rolling sort of one trust picked up every year, or how does that work? No. Okay.
Yeah. I think Margaret's fully formed in that.
We're incredibly up to date here. Things have changed in the last 12 hours, and I haven't had a chance to speak to Grace out with this meeting, but as of this morning, we've managed to get the trust deeds for the final trust amended so that it can also be taken out of the formal audit regime. So we will have no charitable trusts subject to the external audit in the 23-4 exercise now.
That's fantastic.
Okay, so what impact does that have as far as the trust and the running of the trusts are concerned?
absolutely none. It just means that rather than have Ernst & Young carrying out a full and formal exercise, we will have a reciprocal agreement with another council whereby our internal audit team look at their trust records and they look at ours, and we avoid the audit fee.
I think that's very welcome, Margaret. I mean, I remember the committee had quite a lot of debate and discussion around those fees last time, and the same came up at full council again. I particularly remember my colleague Councillor Paul Edlin had made some suggestions in that regard. So I think the fact that we can save that fee is very welcome.
Just on that, do we have the resource and internal audit in order to add that additional burden on them, given what's the staffing situation, which I will ask about later on?
I won't steal Michelle's thunder on that one, but I'll just say that having spoken to other directors of finance who already use the reciprocal agreement, they think that it will be a negligible call on internal audit resource.
Just kind of relying on my kind of professional background a little here, Margaret. I believe that it's an independent examination that would be conducted, yes, which has far less work involved than a full statutory audit. And some of the figures we're talking about here would be way, way, way below audit reporting thresholds ordinarily. Is that correct?
Yes, the number of transactions for all 6 trusts in the last 12 months, we've had, I think, 13 transactions, and it's maybe around about £1,500 in total for the whole lot.
Yeah, I think it's context. Gordon?
Okay, no, I mean, I'm not suggesting it's not welcome that they have been removed. Of course it's welcome, because given, compared to the budget for the audit for the council, it's quite a different thing altogether. However, moving on. Mention was made to innovation in workforce planning. What kind of innovations are there? We have certain limitations within the public sector, particularly when we have positions which actually have to go out. They're quite different from a private sector, in which probably easier to be moulding people into positions, and whereas it's more transparent within, or needs to be much more transparent within the public sector, and we don't necessarily have the same flexibility. So I'm just curious as to what kind of workforce, what innovations are available to the public sector. Any examples at all?
Yeah, I mean, I'll bring in Grace on that. I don't know how much work has been done in this review so far that you could comment on, or do we need to wait for the report being published?
So we haven't started the work for this council, but certainly we had a meeting with Audit Scotland a couple of weeks ago, and they have started the work at 6 councils, I think. And the examples they're drawing on tend to be digital, so they tend to make to be the arrangements to make it easier for people to work where they are, so like handheld devices, things like that, particularly for people working in housing. They did use an example within the guidance. One was hybrid working, which is obviously here. Another one was the 4-day week that's been trialled down south, but certainly no examples of that in Scotland so far. So I think that we're very much keeping an open mind about it, because obviously the council does have its own digital strategy, and we were able to kind of draw on some really good examples of the digital innovations for customer contact in particular. So we'll see what happens with the staff as well.
There's always a lot of discussion around the kind of digital transformation agenda and the council's kind of internal change projects. So I really look forward to that review being published, because I think it would be a good yardstick to compare ourselves externally to what other councils are doing, and to know where we are in relation to that. So I think that's really good, a really good theme for this year's review. Gordon?
No, I was just going to say, I picked up that incorrect. I thought it was more to do with recruitment when you were talking about workforce planning, but clearly it's more about operational use. Thanks.
Are there any other questions? I haven't seen any raised hands online at all. I have been monitoring as we've gone through. Just want to give the last opportunity for anyone. No. Okay. On that basis, as for the committee's agreement, the draft audit plan, yeah? Okay, that's great. And thanks for bearing all of our questions, Grace. It's much appreciated. So So it takes us on to the last item today's agenda, which is the internal audit strategic plan for the year 24-25 to 28-29, and I'd like to invite Michelle to present a report. Thank you.
Thank you, Chair. In preparing the annual plan, the starting point is the audit universe, as in previous years. We try to identify all potential audit issues. The audit universe is shown on pages 104 to 106. In preparing the audit universe, we use a variety of resources such as past audits, discussions with directors, heads of service, elected members, and we look at the strategic risk register. We use the audit universe to help determine what the audit needs are, and we then compare this to the audit resources available. As in previous years, we aim to audit every audit area in the audit universe at least once in a 5-year period. The frequency within the 5 years will be based on assessed risk. The exception to this is the school cluster audits, and these are audited on a 7-year cycle because there are 7 clusters within East Renfrewshire, and they're classed as low risk, so they're done once every 7 years. The overriding aim is to make sure that we've got adequate coverage to enable us to provide an annual assurance statement, and the audits deferred last year are included in this year's annual plan. Examples of that are early learning and childcare payments, commercial rents and energy and fuel. On the basis of consultation and the known changes, some items have been added or deleted from the audit universe. An example of one that's been added is contract and supplier management. Some that have been removed now because they've been considered low risk or less relevant are things like grant certification, members' expenses, non-domestic rates. Page 99, paragraph 16, the audit needs have been compared to the estimated audit resources available. The estimated days are based on a number of assumptions in relation to contingency and estimates for training, absence, sick leave, etc. This is summarised on page 103. At the time of preparing the plan, I consider the audit resources to be adequate to deliver the annual plan as shown on page 101, and also to enable us to provide an evidence-based opinion at the end of the year. The staffing, I had 2 vacancies. One has been filled and the person is in post, and the other post is also filled and the person should be in post by the end of April, hopefully. In terms of contingency time, I've set it at 90 days this year. It's quite a difficult area to estimate, and as discussed previously, the trust audits, the reciprocal arrangement will be covered by contingency. In summary, the annual plan on page 101 is there for you to look at, and I'll report progress quarterly to this audit committee as I've done in the past, and subject to any questions I would ask you to approve the plan.
That's super, thank you, Michelle, and that's fantastic news in terms of your department's resourcing. I wanted to kick off with a question myself actually, which is on page 104. In the 2024 year we have 3 council tax type of audits within the universe, one of which falls in 24, which is reductions. I'm aware that Cabinet recently approved some changes forthcoming later in April in terms of how second home discounts and premiums are applied, and presumably that will therefore be covered within the scope of that audit to make sure that the changes that are necessary have been implemented properly.
Okay, that's correct. Any changes in second home discounts will be covered in the one that we're due to do this year, reductions in liability.
Okay, that's very welcome. I'd like to open it up to committee members if there's any questions in Michelle's report at all. No, I think that's been comprehensive enough. Oh, Gordon.
Yeah, just we're talking about housing there. Housing allocations. What are you covering when you're looking at that?
I could share more detail on what's actually covered, but essentially it's looking at the housing allocation policy and whether we're complying with it in allocating houses to people.
So is that in terms of things like homelessness, etc., and making sure that they're getting properly covered, etc.?
It'll be basically looking at whatever our housing policy says in terms of the priority given to different groups is complied with. So it will cover homelessness.
Okay. Any further questions at all? No. Okay, on that basis, can I ask for the committee's agreement of the report? Okay, I've got some nods online. Well, on that basis, thank you, Michelle, and thank you to everyone for your attendance. That's the end of today's meeting. Thank you.